let's talk a little bit about the markets today, because we actually had a very good day. We've been talking about now for the last really couple of months about this ongoing consolidation process that has continued to really kind of just weigh on the markets, and stocks really hadn't gone much of anywhere. And I've drawn this chart like about 1 billion times over the last couple of months. It's almost a daily thing. But then I started talking about, importantly here, just in the last couple of weeks, that when the market broke above important resistance here at the 100-day moving average, we talked about adding exposure to portfolios, which actually turned out to be kind of a fairly decent idea, except the fact that we had been trapped within this very tight consolidation range now for the last couple of weeks. And what we talked about is needing to break out of this range, and that if we broke out of this range, the markets would have an opportunity to go ahead and move higher. And we'll also want to add some more exposure now once that breakout was confirmed. And we've now confirmed that breakout today. Today's move in the market, we're up 23 points at the close, confirms this breakout. So that's actually good news, because we actually broke out, came back down, retested the top of this moving, trending sideways pattern that we had, and then bounced off of it to a nice move today. So that occurred, and that was good, because we also had a lot of sector participation in it, which is also something we haven't seen as of late. So this is all very good positive news, and that really sets the market here, like I said, to go higher. So over the next day or so, we're going to be reevaluating portfolios tomorrow. We're going to be looking at where we want to add exposure. We'll be writing about that in this weekend's newsletter as well. So make sure you're subscribed at the website when we upgrade our allocation models this weekend. We'll want to make sure that you have it. So if you're subscribed at the website, simply just click the subscribe button and put your email address in. We'll email you the report this Saturday to make sure you're doing the right thing with your money overall. Now, I want to step back here for just 1 second, because this is on a daily basis here. But when we manage portfolios, as we've talked about this before, is that we want to manage portfolios on a weekly basis, because weekly closing data gives us much better indications of where the market is headed. And again, we see exactly the same thing here that we saw earlier this week, which is simply the same idea, this very tight consolidation pattern. We've now broken out of that. This now sets the market back up to retest old highs here at about 2860 on the S&P 500. So there's a little bit of room here, not a lot, but there's a little bit of room here for the markets to advance here over the course of the next couple of weeks. We're in the month of June. So very likely by the end of this month, and really possibly it's even very likely that even by the end of next week, we could be retesting all-time highs in the markets. Now, before you get really excited about all this and say, hey, we're off to the races and we're back into a really bullish environment and taking on a lot of excess portfolio risk, I just want you to be mindful of the fact that while we've gone through a consolidation process here, which is very encouraging because this market is moving higher, that doesn't mean that we're entirely out of the woods. This is part of a process within the markets, but again, the markets remain on a long-term basis extremely overbought, and we have a lot of risk here that are building the markets. Again, we were talking about a second ago, we have record debt, record leverage in the market, and come third quarter, we're going to have much weaker earnings comparisons to look at in the third quarter. So expectations are still exceptionally high for earnings because of tax cuts and tax reform. Those comparisons get much tougher starting in third quarter this year. So while we may have a short-term run here, maybe a couple of months, 3-4 months, it could be good. We definitely want to participate with it. Don't take your eye off the bigger picture, which is simply that we're not at the beginning of a bull market. We have valuations at 30 times earnings, and as prices move up, that's keeping valuations elevated. We're not allowing the market's time for earnings to catch up with price, which would allow those valuation metrics to come down. We're not allowing that to happen. So this expansion of valuations is good because it's pushing asset prices higher. But again, we're not solving the longer-term problem of potentially financial issues down the road. And that's the big thing here. Remember, this is all about capital preservation long-term, but in the near term, we definitely want to manage portfolios to make money, but we also be mindful of the long-term risk. And again, despite this bullish improvement that we see here, again, we're still not out of the woods. There's a lot of stuff that can happen between now and old highs. So it could be a trade war policy next week. Tomorrow could be a tweet from the White House. It could be a variety of things, and we could very quickly reverse right back into this downtrend and be right back in the same thing that we were before and say, well, it didn't matter. So Again, there's a lot of things that go on. Possibilities and probabilities are always two very different things. Over the course of the last couple of weeks in the newsletter, we've been laying out our probability pathways. 70% of our probability has led to a stronger market, which is exactly what's occurring. We've been giving about 30% to downside risk. Fortunately, that didn't work out that way. But again, we cannot remove the idea of risk, and you can't avoid the idea of risk. So part of your portfolio management process, this is what we do here, is always to manage that risk. We're always looking at how can we de-risk portfolios even while we're participating in the markets, and that has a lot to do with asset selection, allocations, those type of things. But if you have questions, get by the website, realinvestmentadvice.com. Send me an email. Just simply click the Ask a Question button. Comes right to my desk. I answer every email every day. If you need help, feel free to go by the website as well. Schedule an appointment. Myself, Danny Ratliff, Richard Rosso, John Camarianos, all the guys you hear on the radio show every day. Happy to sit down with you, talk with you about your situation. That's at the website, realinvestmentadvice.com.